Hey traders, it's Hima here, and it's time for Chart of the Week. I've got a tech earnings update for you. Today's Tuesday, October 20th, 2020. Now, important reminder before we take a look at the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. All right, so check this out. I'm going to go over 5 tech earnings, hot stocks that are reporting earnings over the next couple of weeks. And these are exact same 5 stocks that I provided a tribe update to you on 3 months ago for Q2 earnings release. This started off with analysis of the VIX, and I want to do the same thing for you here today. So let's take a look at the VIX on the daily chart as you see here. You can see that the VIX has been testing this support at 24.93, and it's been attempting to break below, but not quite doing it. Now on the other side, the bears of the market, which would mean upside in the VIX, are not able to get above 31.16, which is my updated resistance level in terms of where we should see the VIX climb if we really are expecting a downfall in the market. So now with that in mind, that the VIX is in a indecision point, let's look at each individual stock, again, that I looked at exactly 3 months ago in a tribe video with you just like this. So we start with Tesla. And the date of that last report was July 22nd, so you can go back into the Tribe portal videos and watch the original video if you like. Let's look at where price action and the market action is right now. So Tesla is set to report earnings on Wednesday, October 21st, and we can see that it's been consolidating this giant sideways range. Continues to hold the bull support power zone, and the weekly trend from the March low continues to be higher. So if we can see a closing sustained break above the September 15th high, and I think there's a good chance that we get back not only to the all-time high, but continue to stretch higher. If we're not able to clear this level, then you can see that we have a chance to return to these triangular lows, and that would be updated to the 329.88 level. All of this in the context of a bigger picture weekly uptrend. Next, we move to Microsoft. And what's really cool here is that when I did this last earnings related update for you, I talked about how this market might be fueled by earnings action, and that what we wanted to see was a daily closing break above this consolidation trend line to take action to buy. So I hope you paid attention to that, because we did get a daily closing break and got a nice pullback, an excellent opportunity to buy. In fact, there was a signal between price and momentum here that my students in my 4 zones RSI coverage system know well, that would have actually allowed you to calculate a new upside target and ride this next leg higher, this next drive higher, my GAN students, into the September high. So where are we now? Well, check it out. After trading lower from the September high, we came back to the trend line I identified for you in July, and it's now providing support again. So even though this is a trend line that's been violated, it can still be meaningful in your analysis coupled with other factors. So what are the other important factors? Well, these 2 pink lines represent the support I was looking at in July. So let's update that. Now, the most important support is this low from July 24th that had been tested but not violated, hence the dashed line, and we have been resuming higher. So Microsoft is on track to return to its all-time high from September, and set to do that so long as it stays above this latest daily old high, which again, briefly tested in yesterday's session, but not closed below. All right, so now let's move on to our next tech stock. And again, Microsoft is reporting earnings October 27th, so plenty of time to get ready to trade any opportunities that may emerge there. All right, now let's take a look at a chart of Twitter. Now, Twitter's been very interesting in the news lately, but looking at the stock chart, it's been in a nice uptrend since March. Now, what this purple line is that you see, the slanted purple line, it's not a trend line, guys. It's me taking my simplest market timing tool and extending it out both to the right and left. Students of my loss forecasting trading system, you guys know the tool, and I'm going to show you in future updates of the course how I'm updating the tool even more to make it even more powerful. So here's an example of that. And what I want you to notice is that even though the target for this forecast is for this price, which is approximately $53 on November 11th, before reaching the target, you can see that the forecasted line for the cycles has been extremely useful in capturing these short-term highs in this market. So with the latest price action, what I'm looking at is a recent daily low, October 6th, and the fact that that low at 45.03 has been tested but not violated. So if Twitter is able to stay above this 45.03 and continue higher, you have a beautiful guideline here on how to manage upside expectations. If we see a closing break below 45.03, then I think this market is going to head back towards the most recent low at 38.10 from early September. Twitter is reporting on October 29th, so again, time to be ready for any potential moves. Next up is AT&T. Again, looking back to my July 22nd update on this stock into earnings. AT&T is set to report on October 22nd. And when it was consolidating last time, I had these exact two orange trend lines coming together. Now here's the really cool thing. After I updated you, my tribe, on what was likely to happen, these lines became extremely useful because there was an initial downside break and then a recovery, but check it out. The market capped right in between both of those lines. Pretty awesome, right? And then from there, it started to trade lower, and the original resistance trend line continued to provide resistance. So hopefully you were able to take action and either remain short or go short in this early September range. Now, AT&T has fallen back towards its March lows, but it's hanging out at a key support, 26.90. Again, testing it, not closing below it yet for 2 days. Also, RSI power zones are deeply oversold. So while there's room for further downside in AT&T, I don't think there's any more short opportunities right now. Keep an eye out for a potential forming of a low in between these two support zones that may allow for a bounce higher that you may want to trade. Last but not least is Verizon. Now, when I looked at this stock on July 22nd, I gave you a key timing point for July 23rd, expecting it to form a high. But what happened instead is that the market formed a low on that timing point. And guess what? You can still use that to make money. Again, this is something that I'm going to provide a educational update on to my loss forecasting members very soon. So let's look what happened from there. The market started to rally and exceeded the 58.23 high. That was the upside target. It came all the way up into 61.50 into early September and is now backing off. So where it stands now, Verizon is reporting earnings on October 21st. It's coming up soon. And right now, it is at a key level. That key level is 57.18. And if it holds at this level and starts to turn higher, I'd like to see it move above the most recent daily low or high to suggest a renewed upside. So that would be 59.97. If shares are not able to hold 57.18, if we have two daily closing breaks below that level, watch out for a return back towards the June lows. So that's a look at some hot key tech stocks reporting earnings soon over the next couple weeks here. Harking back to exactly the analysis I used in July, and you can go back and watch that video in the Tribe portal again to see exactly what played out after I said it. All right, catch you on the inside. You can sign up at himareddy.com/gift to get my hot, timely, actionable updates as soon as I publish right to your inbox.